He joins us from Austin, Texas, with $13 billion under management and a flagship fund that beat 97% of its peers for the year. We're joined now by Donald Yacktman, president and founder of Yacktman Asset Management. Good morning. Thank you so much for joining us, Donald.
Thanks. Good to be here.
Now, Coca-Cola is one of your top 10 holdings. It makes up about 4% of your portfolio, but we know you recently sold down some of your stake, and your biggest holding now is rival PepsiCo. Does that mean that despite its iconic status, Coca-Cola is not providing much value to investors like yourself right now?
I wouldn't say that. I think it's just not as strong as it was a few years ago from a valuation, the forward risk-adjusted rate of return basis, which is what we use.
Is that because it's outperformed Pepsi by some 30% over the period?
Well, yeah, in the last year, there's been a dramatic shift from Pepsi to Coke as far as relative change in price. And as a result of that, the forward rate of return of Pepsi is higher than Coke in our view, and so and you could say the same thing about Procter & Gamble, which is our third largest holding. Pepsi's the largest.
Now, when we look at the differences
but Coke's still a good company.
Right. When we look at the differences between PepsiCo and Coca-Cola, PepsiCo is more geared towards the U.S. economy and less so to international markets, particularly the emerging markets, whereas Coca-Cola is very strong in that. Given that emerging markets are still growing faster than the U.S. economy will be projected to grow, what does that say about your view on the economies and how those companies are positioned?
Well, we just tend to look at things slightly different. We're not trying to call what one economy is versus another. I think any great business over the next 20, 50 years will have both exposure in the U.S. and exposure internationally. The U.S. is like over 20% of the world GDP, but yet it's clear that foreign markets, particularly the developing markets, are growing faster.
They're also very different companies, PepsiCo and Coca-Cola, in that Coke is mainly a beverage company, whereas PepsiCo, of course, owns a lot of snacks businesses as well. It's a snack company. How does that play into what you're doing with your investments there?
Yeah, I think Pepsi could change its name easily to Frito-Lay. They make more money on that than they do on soft drinks. But I think, you know, if you go down the aisle, the grocery store aisle, and you see what dominance Frito-Lay has, I mean, it's an indication of how strong the company is. And both of them will work out, I think, quite nicely. It's just we think Pepsi is a slightly better rate of return, and we feel more comfortable with it.
All right. Thank you so much, Donald Yacktman of Yacktman Asset Management. He joined us from Austin, Texas.